What's the word, GA? So we are back. This is the Sunday analysis. I was waiting for the market to open because, as you can see, we had these two candles. This is the 2-hour time frame, but also we have the opening one that kind of was pushing to the area that we've been marking after this huge liquidity grab. This is the second area the bulls chased after the news of last week. So this is very unusual price action since the release of the unemployment and the ISM. Here we are having a huge candle. This is big pressure. As you can see, market will take again the lower part of this range. That's why I always tell you, mark your charts, use your eyes to identify parts where price is ranging in high time frames, because that's where price tends to leave liquidity behind. Tons of traders and orders and stop loss are waiting there, so naturally price needs to get to that point to grab liquidity and get this type of moves to the downside. We have two very strong candles practically covering the whole NFP moves. You have also this huge inefficiency with the candle that actually was the first move at the NFP before we managed to break to the upside. So the huge part of the move was influenced by the FOMC, or the Fed, assuming that there won't be more rate cuts based in the unemployment, and also the indecision based in external factors. Also, we can see that the yields are going up, something that can affect the consumers in this case were both beneficial for the investors. So it's a very tricky situation where big investors might be positioning themselves to buy more dollars and bonds, because at the end this is a very high price for gold. We are still far from the current all-time high at 27.90, but it remains a very high price. So imagine buying a Rolex at almost its peak price. So it's not worth. The price needs to rebalance, or maybe have a huge rebalance. So for now, price will chase this area at 26.77. Sorry. As you can see, this is a huge pressure from the market right now at Sunday. This is Asia. This is pretty much the opening of, I feel, China. And then we have London, and the next week we will be having core PPI, CPI, and more unemployment news. This is very important to check the consumer sentiment and how pretty much the USA residents, the labor market, will react to all the drama that it's been going on, and how the reductions, and as mentioned in previous analysis, how the time they took to reduce, and then the pressure they took out by reducing 3 times last year is affecting, or in this case beneficial for or if it's beneficial for the USA labor market. Pretty much the data is showing, if we go back to the past week, we've been having pretty good news. The ISM is at expansion point. The previous week with the manufacturing, we are near the expansion, so unemployment is also going down. The claims, jobs are being open. As you can see, jobs was a huge amount of new jobs, so expect the price, it can be ranging in these two prices if we don't break to the other area that will be the yellow ranges. We could assume if we don't have any major pressure from these two sessions, that will be Asia and London, we most likely retest here and will be just dancing around these areas, as you can see here or here, because the news will be impacting until Tuesday. So we will be having today and tomorrow no news, and we know that pretty much the liquidity in higher time frames, we are not gambling lower than at least 15 minutes, so we can assume that price can range because the liquidity will be waiting for data and facts. So for now, as always, check your calendar, mark your charts. As you can see, I've been using the same charts and the same areas. These are just boxes and lines, but just look at how efficient they are, and you can make money with this simple knowledge and by doing the simple things. So have a good one, G's. I'll be reporting any news, and we will be covering the whole news the next week. So let's start the week powerful. Let's make money. Have a good one.